Hello, subscribers, and hello, readers. Michael Maduell here, reporting on the world of sovereign wealth funds. There are two topics that I want to cover today. The first topic is Norway sovereign wealth fund possibly entering the private equity marketplace. This is major news. First off, this has been contemplated for quite some time. It's not something that happened overnight. So Norway's Government Pension Fund Global is Norway's sovereign wealth fund. It's managed by Norges Bank Investment Management, which is a division of the central bank. Now, Norges Bank Investment Management has been under new leadership, Nikolai Tangen. He comes from the hedge fund world, the world of private markets, and he understands how corporations work. So it's different from the last CEO of Norway's sovereign wealth fund, who's more of an academic. So recently, they did an analysis and they reported to the Ministry of Finance. They wrote a letter, and this can be viewed off our website. If you're a subscriber at swfi.com, swfi.com, or on a public site, swfinstitute.org. And basically, they wrote a letter to the Ministry of Finance on why they think private equity funds and co-investments should be part of the sovereign wealth fund's investment portfolio. Norway sovereign wealth fund is essentially a universal asset owner. It owns large positions in many, many stocks, a huge passive investor. So this is something that it's big for the wealth fund because usually they're not in the private markets. Yes, they have an unlisted equity, an unlisted real estate allocation, and a renewable energy allocation, which hasn't done so well performance-wise. And so this is really big news. In the letter, in the note, and we agree with them, that's a $70 billion, let me repeat that, and up to $70 billion based off the wealth fund's current market size of money that could enter the private equity fund, private equity co-investment universe. That's a lot of capital. Now, if you look at the large asset owners, the large public pension plans, the large sovereign wealth funds, 80 billion, 100 billion in private markets, private equity, that's kind of what many of these large entities invest in. So this is one more player entering the marketplace. So that gives the private equity business more money, more fee generation for them. Now, again, Norway sovereign wealth fund is notoriously adverse to fees. They are very punctilious in nature and they do not want to pay fees. So they're going to be doing lots of private equity co-investments like their peers, GIC in Singapore, the Abu Dhabi Investment Authority, Qatar Investment Authority. So they're going to want to have that pipeline of deals to lower their overall exposure and cost, to lower their overall cost exposure to private equity, right? So we will see more of this. And so this is, again, very, very big news. The board has to sign off on this thing. And again, this has been brought up over the years and years and years, but now it seems like it's coming to a head and it might possibly happen. Another note about this is that the wealth fund's also keen on investing in private equity secondaries when it starts its startup phase, right? There's a startup phase that they talk about. There's an accumulation phase, a growth phase, and then a mature phase, right? So you're kind of managing this private equity portfolio at the very end of that phase. Startup phase is basically having conversations with the biggest private equity houses on the planet. Think about Blackstone, think about Ares Apollo, think about all the different shops out there, right? And not just the US-based shops, but you also have a lot of UK and Asia private equity firms as well. One important piece that I would also note that they'll probably want to do some sort of knowledge sharing. That's very important for the sovereign wealth funds because Norway sovereign wealth fund is going to have to staff up their organization to handle the private equity asset class. They did the same thing with real estate. They brought on people from the industry to manage that business, to manage that part of the portfolio. Same thing's going to happen on the private equity side of things, but they will have to bring those people. And one of those things is secondment. So maybe a private equity firm might lend over or bring over people, enable the staff to train at Blackstone, to train at these other sort of shops. So we'll probably see more of that happen. Another thing that I found really interesting about that letter, and again, it's going to happen over a 10-year period, up to a 10-year period when it's fully deployed, okay? Because right now, things are slowing down in private equity because there's a lot of the interest rates are a lot higher than they were, 5 to 6 years ago. And so the cost of capital has increased and the IPO markets are not as frothy as during the pandemic and kind of during that time period. So what I'm saying is that they're entering private equity in a very tough moment right now, which could be good or bad, depending on how you want to look at it. Furthermore, when it comes to their co-investments, they're willing to acquire non-controlling interests in companies. And this is gonna jump to my other area, which is about CFIUS and greater national security risks, right? Now, Norway, New Zealand, Canada, they're kind of in the UK Western realm where the US government has less concern over those countries than, let's say, Gulf-based economies, China, obviously Russia and Iran. That's on the other end of things, right? So still, CFIUS is a concern for any kind of asset owner, right? You need to be cognizant of the new rules that have come into place, and we expect tighter rules coming up. Now, I don't want to talk about that right now. I still want to focus on this big deal. So if you're a private equity relationship manager, you need to be spending time actually in Europe right now. I would probably go approach all the Nordic funds and include Norway's sovereign wealth fund on your list. Yes, it will take time. It might be 1 to 2 years before they really start. If this does get approved, it might take quite a bit of time, but it doesn't hurt to build those relationships right now, okay? Because $70 billion is a lot of capital, all right? That's only between 3 to 5% of their current portfolio right now as we speak. And in addition, they're also keen on a wide range of sectors and geographies. Just like their listed equity portfolio, they hire specialist managers. So those that specialize in a certain sector, like technology, like in sports, those will be attractive for the wealth fund in due time, as well as geographies, right? They just don't want US exposure. They'll probably want Europe exposure as well, and possibly parts of Asia at first. So it's really big news. Now, I'm kind of a factotum here at the Sovereign Wealth Fund Institute. I still do research. I get my hands dirty as well as running this organization. And so I'm kind of getting all these inputs that are directed towards me. And from what we're seeing is that direct investments are still happening in the world of sovereign wealth funds. And this is where I'm going to jump to right now. I'm going to jump into why the US government could be scrutinizing more of these Middle Eastern sovereign wealth fund deals, right? And this is because of the Gulf sovereign wealth funds relationship to China, right? There's no secret that there are geopolitical plates shifting as we speak right now. This has been some time in the running, but now it's really public, right? And I wrote an article myself on the 27th about this. It's called "Why is the U.S. Scrutinizing Middle Eastern Sovereign Wealth Funds When It Comes to China?" You can view it. I believe there's no paywall on it, so anyone can read it. And basically what I talk about is China was the darling, right? And India was kind of growing slowly behind them when it came to attracting sovereign wealth fund, public pension fund capital. Canadian pension plans, you could say Ontario Teachers Pension Plan, CPP Investments, these large pension plans were going big into China. Properties, which the Chinese property market is about 30% of the economy compared to about 15% of the US economy. And again, China is going through a huge process when it comes to real estate. And then you saw a lot of these pension plans and sovereign wealth funds backing Chinese tech companies. And then you had the issue with, well, these Chinese tech companies are getting way too powerful. Jack Ma is getting really powerful here, the co-founder of Alibaba. Let's rein them in place. And so massive crackdown on first the Chinese insurance companies, then the Chinese tech companies. And then, you had and kind of in tangent to this, the election of more populist leaders at the time, President Trump, right? And he wanted to realign trade with China. And interestingly, Biden's taken the same playbook from Trump on this protectionism, trying to even out the playing field. And Trump made CFIUS a bit tighter with the FIRMA Act in 2018. And Biden is kind of following through with some parts of that as well. So wealth funds, they are co-investors with private equity funds. Sometimes they'll actually buy companies, buy real estate, right? And CFIUS is becoming a major issue here, right? So basically, for those unfamiliar with what CFIUS is, let me explain to you briefly here, right? So basically, CFIUS is a way for essentially the president to look at transactions, right? It's essentially, I want to make sure I get excited. It's the Committee on Foreign Investments in the United States. Okay, so they review deals that could pose as a national security risk, right? CFIUS reviews focus solely on national security concerns. It's an interagency committee authorized to review these foreign direct investment transactions. All right. And they now are reviewing foreign non-controlling equity investments in the US in the areas of, they're adding this, critical technology, critical infrastructure, or the sensitive personal data of US citizens. Now, take a step back here. What does that mean? Even look at the last point, sensitive personal data of US citizens. That would be almost like every single data company or AI data company out there. Any company that adopts AI, and if that includes data on US citizens, then your company, if a wealth fund or foreign pension wants to invest in that company, it could go under CFIUS. And typically, there's 3 stages of how the US defines what a national security risk is. Number 1 is it a threat to the country, right? Pretty obvious. And then what is the vulnerability of which it has to the US? And the third, or what are the consequences, right? What would happen? What are the different scenarios? Those are 3 stages of how the US government kind of looks at these things. And part of the process involves the National Intelligence Council. They have a National Security Threat Assessment, NSTA, for transactions under CFIUS review, all right? And if you want to get more nerdy on it, they look at TID US businesses. And these are businesses that produce, design, test, manufacture, fabricate, or develop one or more critical technologies. They'll perform functions set in, like in the law, Appendix A, I can't go over it. And then the third part is, again, the sensitive personal data of US citizens, right? That's kind of broad. That could be addresses, phone numbers, email address, healthcare records, all of those things. So if you're a sovereign wealth fund and you're doing co-investment, just know that this could impact you. And if you're a private equity firm and you want wealth funds as co-investors, this could, this is another hurdle for your deal. So with that being said, the 2 things I want to cover on this brief update is, number 1 is Norway Sovereign Wealth Fund, their possible entry into the world of private equity, $70 billion potential. Could be more if the fund gets larger in size over 10 years, right? Could be 100 billion. Depends on how much that fund grows. And looking at the price of oil right now and looking at the past, 10, 15 years, there's a lot of demand for oil, right? I mean, more people will be consuming it. It's something that right now it's an inelastic commodity. Number 2 is the geopolitical shifts when it comes to foreign direct investments. The US is still a destination for sovereign wealth fund capital. And my article, again, focuses on the China element, right? Because a lot of the sovereign wealth funds continue to do business with China, and there might be some information sharing deals, and the US is concerned about that. Quick amount of information right here. We have some stats, and again, they're always updating, and we're probably really undercounting it. We're only calculating data that we have tracked. There's probably some deals going on all the time. There's also debt deals that are happening all the time that we just can't capture. But in general, Middle Eastern sovereign wealth funds investing in mainland China equities funds in 2022 was about $250 million. Okay, it was a huge freeze. In 2023, it's $2.6 billion. So more than 9 to 10-fold increase in that amount. And what's that saying is that the wealth funds are now comfortable, the Petro One, right? They want to take that capital. China's buying Middle Eastern oil and gas, and then the wealth funds say, hey, let's deploy that capital into some of these Chinese companies. A lot of them are actually going to mainland Chinese A shares companies because there's liquidity opportunities there. And this is while, again, other Western investors pull out of China. Norway Sovereign Wealth Fund closed their Shanghai office, pulling back operations to Singapore, while Maduell opened up a Beijing office. And Kuwait's has a China office for quite some time. Anyways, if you're not subscribing to us, we have a free newsletter off swfinstitute.org. Just click on the newsletter at the very top, or scroll down, it says Public Fund Monitor. It's free, and that's our free email newsletter. However, if your company or yourself, you want the intelligence, the research, you can always reach out to us on our contact page, and our sales staff would love to have a conversation with you on how we can provide you with research to help you and your company make better decisions. So thank you very much, and stay tuned to what we're going on. Oh, last bit quickly here, our events. I know a lot of people like to learn more about our SWFI events and our conferences. We have the Global Wealth Conference brand. Just go to gwc.events and you can see our latest schedule there. All right, have a wonderful day and take care.